Me too, man.
Awesome. So we are live. This is amazing. I am now just going and checking this out. Yeah, it shows that I'm live. Give it a second. Give it a second. Alrighty. Oh, perfect. We are live. This is even better. I opened up my Facebook, so just making sure everything looks good. Awesome. Well,
That's exactly what I
Parag,
did.
it
Yes,
is
sir.
12 o'clock. We've been aiming for this thing for a couple of days now, and I am going to share the link of our live. Parag, I'm going to send it over to you, and then you can also put it up on your Facebook page as well.
Perfect.
Give me a
And
quick
Sid, did you
second.
say
Let's do
couple of
that.
days? I thought this was more like couple of years in the making.
This has been a lifetime in the making because I remember the first time we sat down to talk about this, if you recall, in your car, and we said, Parag, we need to do something together because you're an SBA guy and I'm more of a conventional guy, and there's definitely a lot of conversations to be had here. You know.
Yeah, exactly. I remember the day, and this is great.
Perfect, perfect. I am hearing a little bit of feedback. I'm just saying that just as a heads up.
How are we now? Are we good?
Yeah, yeah, no, this is good. This is good. So awesome. So listen, to be respectful of people's time, and know we said we're gonna end this around 12:30, so we'll be respectful of that. So Parag,
Absolutely.
I'll do a general introduction for myself, and then also I'll leave it over to you, Parag, and then we're gonna talk about commercial mortgage. That's the topic that we wanted to discuss today, and it looks like we have some folks that are joining us in the live. So thank you for joining us. My name is Sid Vaidia. I am a finance professional. I work for a banking organization, as well as I'm the founder of Switch Events. And Switch Events is a networking platform I designed where we put people in the room and we connect people. And Parag and I, we go back way too many years. He's also an ex banker himself. And he decided to go off and try to change the world with SBA. So, Parag, I'll leave it over to you.
Hey, thank you so much, Sid. Super introduction, and like I said earlier, this was a dream that we both kind of sat a couple of years ago and said let's try and bring something like this out. And I'm glad we finally kind of made it happen. But yeah, today my name is Parag Nevatia. I like Sid correctly said, I was a banker for 20 years myself. 7 8 years ago, I kind of took a spun, got out of that side of the desk table, if you will, to create an advisory company, which basically is Easy Funding Solutions. And we're going to talk a little more about that today. But it's a great opportunity, Sid, and I'm excited to talk about commercial mortgages and how they're handled, and hopefully this will be a really good informational kind of a segment for people to learn from it.
Yeah, yeah, no, I completely agree. And throughout the program, I'm using StreamYard service, so we do all sorts of fun things. So here you go. Look at that. Connect with me and Parag on Facebook, where hopefully you are watching us. On LinkedIn, both me and Parag have a LinkedIn, and also on Instagram. Parag, I'm not really sure if you have one, but I go by the name Sid V. Connect with me, and I'll definitely connect you with Parag if you don't.
Absolutely, absolutely.
Awesome,
But
awesome.
yes, we are
So
on Facebook and LinkedIn. Yes.
that's awesome, man. So both me and Parag, we are in New Jersey. However, I'm more of a New Jersey-based lender. I do deals in New York. Parag, you do across the country. With your SBA relationships and so forth. Let's just before we even get into kind of the quirks of the deal, right? Let's just talk about a commercial mortgage, right? And it's a hot topic right now because we look left and right, and the economy has been kind of in a whole different lifestyle with the whole pandemic, right? Um,
Yes.
I'm getting calls like just this week. I've picked up 7 new packages, and the packages meaning deals that are actively being looked at by real estate people that may be, buying a piece of property, maybe a building or a warehouse or whatever else, right? What are you seeing in the market, Parag, with this whole pandemic feel?
Well, first of all, the changes in people's minds is one thing, and how they handle businesses, how they're running businesses. There's been some kind of a deliberate pause, I think, a forceful pause in the way they've been thinking about business and real estate. On one side, we talk about companies that are kind of downsizing or having people work from home for the rest of the year, i.e., don't need that much space anymore. So that has some kind of an impact on real estate as well, from a rental standpoint, from a value standpoint. But then on the other side, I've also had conversations about uh, where people used to sit in cubicles close to each other. Now they need more room to actually make rooms and offices and cabins and suites. So I think there's been like a shift in the way people have been thinking and running a business, depending on what business we're talking about, B2B or B2C or C2C. But the fact is, there's been a change in what I've seen in how people are landlords are looking at property, which has a huge impact on what we're going to talk about. It's which angle you're looking at, commercial, conventional, or SBA. So
Oh yeah, oh yeah, and that is in Prague, we do a lot of referrals back and forth because of course not every client needs a specific type of mortgage, so you gotta have to understand the game, and so I talk about my banking years, and I'm still in the banking world, so I only deal with the commercial mortgages, conventional structures, which go up to, at least for the banks I've worked at, a 10-year term type of thing with 25-year type amortization. Talk to us about the SBA mortgages, because you guys go all sorts of crazy stuff.
yeah, no, it's very interesting. Before we kind of dive into the details of that, if
Yeah.
I could just kind of throw out why SBA, right? Um, I was a commercial lender just like yourself for a very, very long time, the first 10 years of my professional career. And somebody actually told me, "Are you sure you want to do this? Are you sure you want to dive into the SBA world?" Right? And and here's the thing: why SBA? SBA is all about the Small Business Administration program. It's a federal program that started in 1953, which basically is an instrument to encourage lenders to look at what doesn't fall within SID's world, right? The conventional parameters. Therefore, you want to still make the deal happen, but if you can't make it happen because of the fact that you got 7 units and there's only one person, that the business owner occupies 1 unit, or the business owner is just an outright investment property, it doesn't even qualify for a non-traditional kind of a look. It is a conventional look. However, if the individual, the business owner, wants to occupy at least 51% of the total square footage that's occupiable on the property for their own business, now it qualifies them to turn the switch off towards an SBA proposition, which basically is, all right, I may not have all the collateral on the planet for this deal. I have some, or I may have none, but I still want to make this deal happen. Can we still look at it? Now, that's the difference between a conventional world, which you're in, which is give me cash flow, credit, collateral, or we're not, most likely not right at this place, we're not going to be able to take a look at it, which basically is the same pretty much on the conventional side. However, if there's a shortage in collateral coverage, that's when the SBA window opens up, or SBA door opens up, to hear out the story about how you can look at it from an SBA standpoint. What that means is the government encourages those lenders to open up the SBA doors and do a loan on the SBA side. Down payment structure changes a little bit. The loan structure changes a little bit, but we'll kind of get into that a little later. But the difference is when you don't qualify for a conventional, that's when the SBA doors open up. You want to be able to see what is the right thing for the client, for you as a business owner.
Yeah. And then, of course, the SBA, I believe so, and correct me if I'm wrong, but focuses on more owner occupied, right? Which means that you have to be operating your business from that location.
100% owner occupied, absolutely. If it's an investment property, right off the bat, it doesn't even qualify for SBA
Yeah.
financing. One. Second, also don't forget the 51% square footage. So if you're buying a business, a property in which you want to put your business into, you better make sure that you're occupying at least 51% of the total square footage. Otherwise, you will still be disqualified from SBA financing. One. Second, if there's a construction element to it, now if it's a renovation, within four walls, it's fine. It's still 51% occupancy. But if you're changing the structure of the building, construction, you then need to occupy 60% of your square footage of the building.
Oh wow,
So there's a few
I didn't
changes in
know
the
that. Okay.
dynamic. Yeah, construction is 60%.
Yeah.
If it's structural change, not cosmetic, but structural change, 60% occupancy. So that becomes a little tricky. I've had situations, Sid, to share with you a project a couple of years ago where it was a restaurant on the street level and two apartments upstairs, and the restaurant had a basement for the restaurant as well. So we could get as close as 47% in occupancy to the total square footage, but it still
Huh.
disqualified the deal from an SBA because we were not at 51.
Huh. Wow. Okay.
So we
I mean,
were
is SBA still very focused right now on construction? Because I could tell you on the conventional side, a lot of people are shying away from it at the moment. You know.
No, you're right, 100%. Now it's got to make sense. Don't forget, COVID is a whole different factor that's into every banker's mind right now. If your business is not an essential, you're not getting customers to come in, because where we have been trying to get out over the last 1 week, we all have seen the spike in the numbers.
Oh yeah.
So, the problem is, if you don't have customers spending money, the revenues are down. Chances are the banks are not lending because the revenues are down. So going back to agreeing with what you're saying, it's tough right now, even on the SBA side, man. Just not the conventional, but on the SBA as well. The lenders
That's
are
very interesting.
picking and choosing, cherry picking the projects right now.
Well, I will say volume has significantly picked up, and you can, correct me if I'm wrong there, but I mean, I don't get 7 to 8 packages like the way I did, on any given week, just like that, So there is definitely a real strong interest in getting deals done. But at the same time, every deal qualification has just like the credit metrics, the underwriting metrics, all those things have now gone significantly higher.
100%, 100%, and that's what makes it trickier. Um, Again, on the SBA side as well, for the lenders to really understand how revenue is going to be generated from the property. For example, I had another project as an example where somebody was buying a condo to use for their own business, so business condo to be used for their own business, but how we had to structure that deal under SBA parameters, because it could have been a conventional. If they occupied
Yep.
100% of it, it could be a conventional. If they could have rented it out, it could still be a conventional project. But there was a business element, acquisition element to it as well. So for us to kind of combine both the business and the real estate piece together, we said you have to qualify the real estate to be qualified for an SBA deal, SBA financing. So how do you do that, Parag? Let's talk and make it happen. So we basically said, if there's 100 square feet in the condo, you need to occupy 51% for your business. What you do, how you do, doesn't matter. I'm sorry. If you occupy 51, you can rent out 49. Now you can make rental income from the 49% occupancy. So it's very
Wow.
interesting. Yeah,
Yeah, it is very interesting. So let's talk about what are let's talk about the fun stuff, right? Let's go a little bit now, diving a little bit deeper. We're at 12:15. We got about another 15 minutes. And so, folks, just so you know, I know me and Parag, we started this kind of thought process to try to help educate the business community on different topics. We're going to try to do this every week or every other week, depending. But our main platform is going to be Facebook Live, at least for now, and then we'll consider putting this onto YouTube and so forth. But today's topic, we're talking about commercial mortgages. Parag did a fantastic job trying to explain the actual thought process behind what SBA is versus what conventional is, and clearly there is a differentiation there. Let's kind of go into a structure, right? So I could tell you from my side, when somebody comes to me and says, "Hey, Sid, I'm looking for a commercial mortgage. How much down payment do we have to put down?" And there is a difference between the down payment. Now, for a regular deal for me, it's between 20 to 25% down payment. And that's because the bank, or every bank that I've worked at, has been saying, the ownership needs some level of skin in the game. And that's the amount they want as a down payment. And that's for new purchases And then, of course, refinances work slightly differently. Parag, why don't you talk about the SBA side?
Yes, a very, very different dynamic on the SBA side. Again, having qualified the project first for SBA from an occupancy standpoint then leads to the down payment, obviously. And the down payment is, like you said, skin in the game. Um, you know, SBA regulations, the SOP says 10% down is minimum that's required on a project. However, there are a lot of prudent lenders out there who would say 10% is just not enough. It doesn't cut it. We need more skin in the game. Now, do understand down payment is just a word, but it has a lot of reaction on cash flow. The less down payment, the higher the debt burden, the cash flow, your debt service coverage.
Mm-hmm.
So the SBA regulation says 10% is should be good enough to get any deal moving. However, if the cash flow, they don't say that if the cash flow is weak, then the down payment needs to increase.
Ah, okay.
That's the
Okay.
logic side, right? So
Okay.
the book says 10% is okay to move, but then it's the bank's determination that if the cash flow is not enough, then the down payment needs to go up to 15%, 20%,
Got it.
or
Got it.
maybe
Okay.
more. Once you start talking about 20% or above 20% down payment on an SBA project, that could actually change the dynamic whether it's should be conventional or not.
Interesting. Interesting. Got
So
it. Got it.
it changes the way the project is looked at and who the lender is and what the views are. So down payment varies from 10% to 20% typically on an SBA scenario is what I have to leave you with.
Awesome, awesome. So we do have some awesome engagement here. Again, Parag, we are starting this brand new, so we didn't think that we were gonna get people actually watching us, and we're getting comments, and it's fantastic.
It's awesome.
We're definitely going to keep this running, and so that's a very valid point you bring up about the down payment because honestly, before the rate or the term question even comes up, you got to know if you can afford to put a down payment down.
Listen,
And
last night I spoke to somebody and said, how much money do you have? There's nothing wrong with asking that question because at the end of the
yeah,
day, it is down payment. If you don't
yeah.
have enough down payment, let's not beat around the bush. What the rate is, what the term is. Can you make the deal happen based on the down payment first? Now, there's other things that qualify for in lieu of down payment or qualify for what we make as down payment said. It's interesting. Gift. You can get a gift as a source of a down payment. You could have a combination of a seller note as a down payment.
Hmm.
You could,
Wow.
but the regs say you need to have at least 50% of the down payment should come from your own skin.
Got it. Got it. Okay.
All
Okay.
right, what if I don't have that money? Okay, now's the time for you to sit with your buddy and say, you got money, my friend. Why don't you come in as an investor and join me? And you
Yeah.
bring in the money, that takes care of the down payment piece. Let's perhaps get a gift from a friend or a family who's willing to give a gift to get more down payment into the project. Now we got a real deal on hand. But it's amazing to structure a
I have to
loan.
give it, Parag. You know, like the ins and outs of the SBA, man. I mean, look, conventional. Somebody calls me, I'm like, hey, it's 20 to 25%. I mean, yeah, maybe we can squeeze, but honestly, you can't. I mean, it seems like there's ways. Of course, from the bank side, most banks are now even asking for liquidity verification, which that wasn't really a question all the time. Now, boom, first question: hey, do you have the cash? I need proof of it, and then we could talk the next step because the fear factor is that we're gonna kind of spin our wheels, and then once we spin our wheels, then it's like, oh, there's nothing's gonna happen here. Um, yeah,
If I could throw in liquidity, the word that you mentioned, it's very important because now you got to look at pre-closing liquidity and post-closing liquidity as well. Banks have
that's
started
true.
waking up to it. Banks
Yeah,
have started realizing
yeah,
we're not just getting a deal done to sell it in the market. We're actually getting a deal done to make it successful.
yes,
That's a whole different angle because post-closing liquidity, folks, is money that you have in your pocket after you put the money down for the deal. Um, Very quick example, and I know I don't want to stretch these conversations too long and get more questions in, but yesterday I did a webinar where I used a pizza pie and a sub as an example. You got $15 to buy a pizza pie, but wait, I got 10. I can't buy the pizza pie. I can perhaps go for an $8 sub. And now I got $2 left in my pocket.
Huh. That's an interesting one. Yeah, you
That
have to dumb it down. Yeah.
and the $2 is what we are referring to as post closing liquidity over here.
Yeah. Right. Well, you need, and that's another thing, right? With particularly when you're dealing with owner-occupied businesses, right? So owner-occupied, again, for people that are listening, right? You are running your company, and you're going and purchasing a property, and at least 51% of the actual property square footage, however calculation, has to be occupied by you. That is the qualification for owner-occupied for me, as well as this way, Parag, right? So what basically the post closing, we're also doing the same thing now, crazy enough, because we want to make sure that, hey, once we're done with the deal, you're gonna forget about the being able to pay your mortgage, but you're gonna have the business. You're gonna be able to make payroll. You're gonna be able to do this.
So that brings up reserves
Yep.
as a next topic, right? Do you have the reserves to run the business and that's something else that banks have started like being very cognizant of in your
Yeah.
world as well.
Yeah.
You know, does the client actually have, let's look at the personal financial statement and see how much money they have before they close the loan and after they close the loan as well. Or
Exactly. No. Yep.
what do you have to say about that on the
Yeah,
reserves?
so we are actually on the reserve side for the place that I'm at. We're focusing at the moment on making sure that the liquidity verification happens before and after. Same what you just said. The reserves, we are looking at a certain amount of months for escrowing the payments up front to make sure that the P&I and the taxes, right? So principal and interest, and this is kind of a golden rule in buying real estate. You might not be able to pay a bank, but make sure you pay your taxes.
Oh yes. Oh yeah.
Because I've seen more tax problems than because now you're dealing with the government versus the bank.
Which is scary but true, and it's amazing. It's real. You got to be able to make your tax payments. That's a bigger sin than having a negotiation talk on the table across the table with the bank.
Totally,
It's
totally, totally.
so I agree with you on that. What else?
No, that's
So
Yeah, so what else we want to talk about? I mean, we want to talk about and we're going to be doing this, people, consistently, right? So today's topic was just a general overview of commercial mortgage, how SBA and versus more traditional conventional structures work. We're talking about down payments today, and for anyone that's watching this, we're going to have this up on YouTube. Both me and Parag's channel, we're going to have this up on, of course, Facebook. So please rewatch this because some of the small little hints, it's unreal, Parag. Like the things that come out of it, because somebody might not know how much down payment to think about, right?
yes, and again, you got to talk about down payment money. When I talk to people, I divide the money that they have on hand into two parts. One is the down payment, and one is the post closing the reserves. If this is weak, you got to work on this. If this is weak, you got to work on this too. And there's no deal if you don't have one or the other. You got to
Yeah.
have both.
No, I hear you, and that's the other thing. I get a lot of people that say, "Hey, I don't qualify for conventional, nor do I qualify for SBA." Then I'm saying, "Are you really going to go for hard money?" And yeah, it's quick, but are you really going to go for hard money, or do you really want to rethink this? Because the thing is, the moment you start thinking about going to hard money, you got to also get your finances in order. And most of the people that are coming to me that are going hard money route, frankly speaking, have a very, very strong default rate too.
Correct. I
And
agree. And that kind of, sorry, good. Complete that.
no, and so my just kind of closing to that little point that I was bringing up is that every deal won't work, so you got to really rework a lot of transactions.
True, and to that, I'd like to add that Easy Funding Solutions, we've made a product which is called Discovery Analysis this year, which basically allows us to look at the given situation and figure out the best route. It could be conventional, it could be hard money, it could be MCA, it could be SBA, it could be private. But the discovery analysis, a product that we just launched this year, a couple of months ago, where it really identifies, first, it looks at the complete picture, financials, the complete picture, the story, the vision. and then look at the numbers behind all of that to figure out if it's the right fit in each of these financing instruments. It could be conventional, like I said. If you have the down payment, if you have good credit, if you have this, that's the route you need to go. If this is missing, then maybe you should we do this. So that's something that I've found missing in the business community, which is identifying the right. There's a lot of websites that give you all the names of banks,
Yeah.
but it
Oh
doesn't
yeah.
tell you how to structure
No,
and
and the structure is one, and the other thing, and I love what you said, the discovery program. I'm going to actually pick your brain on, because there are definitely people I come across, Parag, and unfortunately, I didn't know about the discovery product. So now you just kind of taught me something, right? I'd love so for anyone or here, I don't know. This is so this side right here. I'm still learning this. This is
there you go.
Parag's email and website. Please reach out to Parag on this discovery piece that he's talking about, because a lot of people just come and say, here's my tax return and here's the purchase contract. Can you figure it out? And it's like, as a banker, I can figure it out, but I'm going to give you the quick yes or no. Parag's going to go and find out that next step.
And to just piggyback on that, it's people that come up with mixed notions, mixed advice that says, I don't want to do this, I don't want to do that, I don't want
Yeah,
this, and I don't want that. Then you're restricting yourself to not being open, one, which is a problem. Second, you don't even know what qualifies you're playing with to be able to get what you want, and maybe that's not right also, because you don't qualify to get what you want. So it's a way of like saying, let's not come with a closed vision to say, this is what I want a conventional loan at 30%. Well, if you don't have the cash flow, you may not qualify for it. But now that opens up an SBA window for you with probably a much lower down payment if you occupy 51%. So you got to like look at the holistic picture of a situation to qualify it for one of these instruments that we have in the market.
that's wow. That's no, I really love the fact that you brought this up, because and we definitely let's do this, Prague. We'll definitely create that into a separate, like, hey, what Sid looks for in a package and what Parag looks for in a package. That will be its own episode. Let's do that, because I really love that topic, and this is what we're trying to do, right? So, and for the folks, if you are trying to figure out, okay, I want to get a package together, reach out to this guy below, and then he'll figure out, hey, Sid, why don't you run with it, or Parag may be able to run with it, or whatever, And we work with each other. Me and Parag, we've been working with each other for some time now. And so, you can email either one of us, or just reach out on Facebook or LinkedIn or wherever. And we're happy to connect, because me and Parag have been referring back and forth for many years. And, we have a good working relationship. This has been an amazing opportunity, by the way. I can't believe, why did we wait like so long to do this?
How it's been at least 2 or 3 years, said, and I think this is great. I mean, the opportunity for us to share experiences with people on Facebook Live, and hopefully
Yeah,
get people to understand a few more things that they didn't know otherwise, and
yeah,
hopefully this just helps them to get moving to the next
of
step.
course. And at least they know that we're real. I mean, you're 30 years experience, I'm 15 years, but we're still figuring it out.
Hey, yeah,
But
30
but I
years.
have to say, this current economic condition with COVID and everything, really, I spoke with a gentleman the other day, and he says this environment is going to reveal us as people, because it's going to be able to show what we can and can't do. And now the data really is going to come out much, much more quicker, at least
No,
from
I
what
agree.
we're seeing, which that means is, hey, we got to kill this deal, or we're going to move it forward, and this is what it's going to take.
True, because there's not too much leeway anymore. Is what's going on, guys. There's no more. Okay, let's put this and think about it anymore, because you're picking up the deals that are real, that are happening, that need to happen, and you're trying to find a quick turnaround to that. Can't sit on it anymore. That changes the way banks have been building pipelines. That changes the way consulting companies have been picking on projects and putting pipelines up. Survival of the fittest. Uh, it's your situation that you need to kind of get an account off and run with it. You know,
Exactly. No,
so
this has been amazing, Parag. Again, you can connect with me and Parag on Facebook, LinkedIn, Instagram. We have our Facebook Live right now going, so definitely reach out to us. And otherwise, Parag, how about this? Let's set the stage for the next show, whenever that is. But let's talk about your
sure.
discovery discussion. We'll talk about what it takes to actually get a package together, and what's the right package qualification from both a traditional lender and an SBA lender.
I think that's a great idea. It's called discovery analysis, and absolutely, let's work on that on the next segment.
Cool.
Definitely. Sid, quick question:
Yeah.
you do have a YouTube channel as well?
Yeah. This is going everywhere. So
Yeah, yeah,
so
yeah.
definitely this is going to be on Network with Sid YouTube channel. You could connect with me, networkwithsid.com, Parag, easyfundingsolutions.com, and Parag also has a YouTube channel, Easy Funding Solutions. And then, of course, we have our Facebook, LinkedIn, Instagram, and all the other places. So if you can't find us, you're in the wrong place.
You're in the wrong place. You forgot to add Spotify on that as well,
Oh,
guys. I'm
yes.
actually
Yeah,
on
yeah.
Spotify, so look up Easy Funding Solutions on Spotify. Yes.
So yeah, and lastly, Parag, I'll give you a little bonus boost there. I listen to Parag's SBA advisory podcast show, and it's on Spotify. I think it's on Anchor, and hopefully you'll be getting it on Apple soon as well. But hey, listen, Joe Rogan just signed $100 million with Spotify, so he's the first podcaster to be able to make $100 million. So Spotify is the way to go, people. And I also run a podcast, C3 Chat Show, but Parag's
That's it.
podcast is, oh
That's
my
true.
god, like there's so much good quality data. Please
Oh,
check it out. All right, and we're
thank
going to end the show right here. Thank
thank
you
you.
so much, Parag.
Sid, you take care. It was great. Thank you everybody for tuning in, and let's try and plan the next one soon.
Sure.